All right, let's jump right in. We're going to break down what's happening with Philip Morris International. I mean, this is a company making one of the biggest, boldest bets in corporate history. And it all boils down to this one single question. It's the question driving their entire strategy. And you know what? Their latest earnings report, it gives us a really crucial update on this high-stakes gamble. And here's the take from the top right, from the CEO, Jacek Olczak. He basically frames this not as a choice, but as an inevitable shift in the entire industry. And it's a shift they plan to lead and dominate. Okay, so the big question is, how is this massive pivot actually playing out on the balance sheet? Let's get into it. We're going to break down the headline numbers for the last quarter of 2025. First up, revenue. They pulled in a whopping $10.36 billion. And look, that's not just a big, impressive number. It actually represents a pretty solid 6.8% growth year over year. That tells you the company's overall engine is still running really strong. And now for the number that investors were really zeroed in on, earnings per share. It came in at $1.70. You gotta understand, this figure is a direct window into the company's profitability, and you can bet Wall Street was watching this one like a hawk. Okay, and this is where the story gets really interesting. It was kind of a split decision, right? They totally hit the bullseye on earnings, which is great. It means they're managing their profits really well. But they came up just a hair short on that revenue forecast. So what does that tell us? Well, it suggests that while they're making good money on everything they are selling, they just didn't sell quite as much as the analysts were hoping for. So let's pivot now to the absolute core of their strategy, the smoke-free products. I mean, this is where the real story is unfolding. Wow, okay, this chart just says it all, doesn't it? For the full year 2025, shipments of their new smoke-free stuff, they jumped an impressive 12.8%. And at the exact same time, their old-school traditional cigarette shipments, they dropped by 1.5%. It's like you can literally see the new engine revving up while the old one is slowly but surely winding down. And if you want to put that growth into perspective, just look at this. We're now at a point where nearly 42 cents of every single dollar Philip Morris makes comes from stuff that isn't a traditional cigarette. Think about that for a second. That is a huge shift. And, this growth isn't just coming from one single product. It's really a multi-pronged attack. Their main heated tobacco system, that's still the big driver for sure. But on top of that, you've got their nicotine pouches just grabbing a huge chunk of the US market, and their e-vapor category is expanding super fast too. So who exactly is buying all this new stuff? Well, an estimated 43.5 million people. Just to give you a sense of scale, that's roughly the entire population of Spain. And this is happening across 106 different markets. So yeah, this isn't some niche trend. We're talking about a truly global transition. Okay, so if smoke-free is the future, then what's going on with the part of the business that, started it all? And here's the crucial part. That legacy cigarette business, it's basically acting as a massive cash cow right now. The profits from those sales are what's providing the critical, quote, financial firepower to fund this absolutely huge investment in their smoke-free future. And the CEO comes right out and confirms the strategy. He says it himself. They're responsibly managing the decline of one business so they can aggressively build the next one. It's a really delicate balancing act when you think about it. But of course, a massive pivot like this doesn't come without some pretty significant risks and obstacles. It is definitely not all clear skies ahead. Yep, and here are the storm clouds on the horizon. I mean, just look at some of these major hurdles in their key markets. You've got Japan, where tax hikes could make their products more expensive and, well, slow down sales. The US, that's a huge question mark with this big cloud of regulatory uncertainty just hanging over the whole industry. And then in other major regions, you're seeing similar tax hikes that are really squeezing the profits from that traditional cigarette business we just talked about. But even with all those challenges, management has actually gone and renewed its long-term growth targets. That gives us a pretty clear glimpse into just how confident they are about the road ahead. So here's what they're promising Wall Street for the next 3 years. First, they're targeting 6 to 8% organic revenue growth. Now remember, that's growth from their core business, not from buying other companies. Next, they're aiming for 8 to 10% growth in operating income. That's basically the profit they make before taxes. And finally, they're forecasting a really impressive 9 to 11% growth in earnings per share once you adjust for all the currency stuff. And the big question, how are they going to fund all this growth? Well, with this mountain of cash. They expect to generate around $45 billion in operating cash flow over that same 3-year period. That's just an enormous war chest, right? Enough to fund new investments, keep shareholders happy with those dividends, and build a balance sheet that's basically a fortress. So the takeaway here is pretty clear. The transformation is definitely well underway, and honestly, it's showing some really impressive results. But the path ahead is complex. It's absolutely filled with regulatory hurdles, and all of that leaves us with this one big final question to think about.